Hello everyone, welcome back to the market flows. I know that my last video has been in a while. However, here we are again in a very similar situation to the one we spoke about in the last video. So basically where we are is we had a technical squeeze, in my opinion, that has been interpreted by the market as a possible pivot in terms of monetary stance by the Federal Reserve. However, I believe that most of what we've seen with the implied volatility going to extreme lows, considering that we still have an inverted yield curve and that we are still to see the impacts of monetary policy or the lag impacts of the monetary policy in the real economy. And thus, I do think that the low IV and the panic narrative around the failing of regional banks and all this conversation around the recession technically push the market higher. So the only thing I have to tell you is that in terms of gamma positioning, for those that believe in this kind of technical indicator, we no longer have positive flows. We are entering now the last week of May, so Charm flows, Vanna flows are all mainly Charm flows are weak. Vanna flows will be negative considering the distribution of open interest across the chain. If there is a spark event that pulls implied volatility higher, these will amplify the sell-off. The same won't be seen on the long side. So what I believe is that you should be careful. Low beta stocks or just reduce your beta if you're not looking for, or if you're not doing an analysis regarding low beta stocks. The best way of looking at this is to increase the cash position. And yeah, I think May and June will be hard month for US equities. Yeah, we did identify the possible the negative flows in Tesla, for instance, around the last earnings results. Nvidia is a little bit of the same. Nvidia has been prompt also on this narrative that it's obviously overvalued. People are obviously shorting and buying puts on this name. And we know through reflexivity that the opposite will happen until these shorts are destroyed, right? Or that implied volatility effectively makes these positions expensive enough that basically will allow for Nvidia to actually sell off in the earnings. So three things to start is that finally we are kind of freed of the panic flows that were generated at the beginning of March with the sell-off with the banking crisis. And now Nvidia is also coming in with a report this week, which will also open a window for a sell-off in that name. And regarding the markets, we'll probably see GDP growth negative this month or next month. And yeah, no more positive flow. So my only tip would be, and this is not financial advice, this is really only my opinion. So be careful, low beta, and we'll see you in the next video. Consider leaving a like and subscribe.